Yeah, it's a good point, Scott. And historically, not all stocks bottom at the same time. So you could have an index-wide ongoing bear market, which I've been calling this exactly that for weeks and weeks and weeks now. But you could have stocks that started selling off 6 months before the broader market and have run out of sellers, or have gotten to levels that are so extremely pessimistic that it almost doesn't matter if they fall another 10%, because the snapback, they could be up 25% before you even have time to put your tie on. So you can do little things here and there on the long side, but to the people who are looking for this elusive bottom day after day, week after week, and getting themselves all gassed up by days like yesterday, where it's the biggest update for the NASDAQ since June and blah, blah, blah. Those are counter-trend moves. Like, how many times can Lucy pull the football away and you land on your ass before you realize, oh, this is not really working. Maybe I should stop doing this. Maybe I should stop getting all bulled up every green day, or every time NVIDIA is up 7% on the day. Maybe I should realize those aren't the beginning of something new. They're just a head fake that is continuing to remove money from traders' accounts. So that's the environment that we're in. I have companies with great news. I know we're going to talk about this later. Amazon doing a buyback for the first time, doing a split, maybe as a prelude to getting into the Dow. CrowdStrike smoking their earnings report. I won't say more on that. Those stocks are up. They're having a nice day. I don't believe that these gains are going to last. I'm not saying, oh, yeah, the coast is clear. We know their results are good. The results aren't the problem. The problem is technicals and the sentiment out there. The selling continues. So use days like yesterday, and I think like last Friday, use those as days to remove exposure to areas that are causing you pain, and that way you could stick it out and you can make it through this period of time. It's not over yet. Rallies are counter trend. The real trend is lower. I don't know for how much longer that will go on. I just know that that is the situation that we're in, and you have to comport yourself accordingly. Stop getting gassed.
So keep an eye on 4250, according to Newton. That's what he thinks is a good sign and can likely help the trend extend. Movement back under 4250, the trend turns back to negative. So you're under that right now, obviously. So you're giving some back today, what you gained yesterday. Jenny, look, to Josh's point, and the other side of the coin is we may be in a downtrend. The football keeps getting pulled as you go to kick it. At some point, though, the football stays and you actually kick it through the uprights. It's just hard to kind of time when exactly that is going to be, and you have to technically break the trend that you've been in. You're sitting in a fair amount of cash, maybe normal for you, but you're more negative than anybody that I've heard in the investment committee in recent weeks.
So I am negative, and I'm kind of big picture macro negative. But as I've also said, I'm long-term bullish on stocks. I always will be. And I love these environments because opportunity is constantly created. So the last time I bought, before 2.5 weeks ago, the last time I bought was November of 2021. Then 2.5 weeks ago, I was able to add 3M and Foot Locker. And I think that's the kind of market we're in. That doesn't mean that I need to be positive. We're not. We're in a really, really tough environment. But I think two things as a long-term investor. One, it is not my job to try to avoid every pullback. It is not my job to get everybody out before a recession or get everybody out through a bear market. We're not going to get that right. So what's our job? Our job is to be positioned well, to be stable, to have a decent portfolio that works on the other end of this, to create a portfolio that has some resilience to this kind of pullback. And that's what I've done with the dividend strategy, is create a portfolio where even though it's ugly and messy out there and I can be negative from a big picture macro perspective, guess what? Clients are fine. Income in the portfolio is completely consistent. I can always say to my clients, the income that you were expecting, that's going to be there. Who knows if the share prices are going to be up or down, but the income you're expecting is going to be there. So I don't want my negativity on the market and the economy, which is totally legitimate because we're in a tightening cycle. We have a horrible situation going on in Europe that we don't know how it's going to flesh out, but that doesn't need to create a negative posture in my portfolio. And yeah, so I have a little bit more cash than I usually do, but it's not a bear statement. All it's saying is I'm not matching my sells directly with my buys right now because patience is what I've got, and, and it pays off.
Fair enough.
This is the kind of market
Fair
where you can
enough.
just wait.
Everybody.